Good morning and welcome everybody to the Schwab YouTube coaching channel for the Monday edition of Trader Talk in today's market. I'm your host, Kevin Hortner, joining you from the Schwab Denver studios today. Pleased to be joined by my friend, Mr. Scott Durfee. Durf, it's great to see you this morning, buddy. Happy
Hey,
Monday.
good morning, Kevin. Good morning, everybody. Scott Durfee here, joining you from the Orem, Utah Schwab Studios, right?
That's right. That's right, Durf. Hey, it's great to be with you today, Durfee. Great to be with all of our attendees this morning as we kick off another full week. We've got some key companies reporting this week as usual and plenty to get to. This morning, we are also joined today in the chat by Brent Morris. If you could say hey to Brent, who is going to get to comments and questions that Scott and I are unable to. But as always, Scott and I do keep a close eye on what's happening there. Try to engage with your comments and questions where pertinent and bring those to our discussion. So please feel free to post for the duration of our show. We do go about 45 minutes in total here, everyone. Also, if you're not already doing so, please follow us on the channel. You can do that by subscribing to the Trader Talks page, and you can follow us all available individually on X as well. Okay, so we're going to kick things off with disclosures before we move into the chart. So please remember that everything we cover for you today should be considered informational and educational only. We do not make recommendations. We do not endorse any specific approach to trading the market here. What we are offering up, however, are concepts, strategies employed by traders who utilize technical analysis. These are simply educational points. Whether you choose to work with them or not is your choice, of course. What we would invite you to do, though, is customize a process utilizing some of these ideas for your own trading. Now, as you do that, it is your due diligence, of course, so make sure you're going through a number of those areas that could be helpful for you. Remember that technical analysis is just one of our decision-making puzzle pieces. It is not the entirety of it. So balance that against a number of other key factors and ideas. Now, in the Trader Talks session here, everybody, we typically start you down a top-down approach. We hit the major indices, so we will look at the S&P 500. We will check in on the Russell 2000, the NASDAQ 100. Look at semiconductors, probably going to check in on oil as well today, and work our way through some of the sectors in leadership positions. Noted late last week that we do have all 11 sectors on a year-to-date basis in the green. So it's been a strong year. We're going to take a look at a lot of those trends as we kick things off for the week. So, Scott, talk to me a little bit about that S&P 500. I'm going to lead with a very basic concept here, and that is that as we continue to stay at these elevated levels, high prices, new highs, etc., are not a bearish development for the S&P 500.
Yeah, you know what, Kevin, and that's a little bit surprising for a lot of people. There's no question that we are continuing to see a lot of bullish activity, a lot of bullish sentiment happening. And it's a little bit surprising, to be honest with you. I mean, take a look at what we got last week in terms of the job report. You know, we did not get a stellar jobs report by any stretch of the imagination. Yet, hope springs eternal among investors and traders, and it looks like we're still planning on a very bullish market, at least for now.
Yeah, it's hard to get away from that. Scott, what about the mentality of a market that stays elevated like this, digesting a bad news job number like that? Does that speak to the belief that the market can sustain these elevated interest rates while while jobs are taking a hit? I don't understand how that could work out that way.
Yeah, I don't understand it either, Kevin, but that is indeed the signal that we're getting, isn't it? I mean, it's hard to refute that. But you know, again, we are hope is springing eternal among traders and investors, and we are definitely maintaining that bullish posture, at least for now. What's going to be interesting to me, Kevin, is you know at some point when a lot of these economic indicators, and I know we're talking technical analysis, But when a lot of these or a lot of these economic indicators and so forth start showing that maybe the Fed needs to raise interest rates, various things like that, then we may be looking at a different scenario. I've been saying for a while that I believe the market is kind of overdue for a meaningful correction. So, but we're maintaining some bullish posture.
Yeah, and I think that's the hardest part for traders, of course, Scott, is the balance against what we think should be happening based on all of the news details, right? The narratives and so forth, and then watching price action to trade the other direction, and it's difficult. And it reminds us that from a technical aspect, traders who watch the trends tend to lean into what they see, not what they expect to see necessarily. So the action of the last week and a half, 2 weeks here has been quite bullish, and looks like we're building a bit of a bull flag up here. And so perhaps we're looking for, continuation of the existing trend. We could be simply pausing and allowing prices to capture or kind of catch up with things. But it's an interesting development because at some point, this is going to change. The way we digest that news will shift. We just haven't seen it yet. So, Scott, in terms of of any kind of pullback, are you of the belief that when you're looking for a pullback in the S&P, do you like the idea of coming back to maybe prior highs in a horizontal fashion, or perhaps maybe a more of a diagonal fashion, being that we broke out what seems to have been a bit of a triangle viewpoint?
Yeah, I think on this one, I prefer the bit. It's not sloping a tremendous amount to the downside, but I do prefer the diagonal approach on this one, Kevin, because it's truly where we're finding resistance. We could force a horizontal resistance in there, but that would be forcing it. We really are seeing a bit of a diagonal resistance level. And now the next question then would be, how far would we expect it to pull back? If it is indeed pulling back, how far would we expect it to pull back? And technicians would look at that level as a potential spot for a bounce in a pullback, Kev.
Sure. Yeah, and we can see that. I mean, it's coincident with the 20-day moving average in orange right now. Some traders might be thinking that we've got some legs and you could be perhaps using a speedier moving average, so maybe like the 10-day. This is not uncommon, by the way, everybody, from a technical aspect. You break out of a consolidation, and that's really what we might call this, right, Scott? A bit of a consolidation with higher lows, lower highs, and then we break it to the upside. It's not at all uncommon for us to start trending thereafter, and that trend can work commonly against a speedy moving average. Sometimes the very speedy 5-day, sometimes the 10, sometimes the 20. But that's one way that we might look at it. Any other initial thoughts here relevant to the S&P?
No, you got it. But I will just re-emphasize what you said about those speedier. I like how you called them that, speedier moving averages. And honestly, in a situation like this, and again, this is not a recommendation, and everybody has to find where they're most comfortable. But in a situation like this, I would be looking with the 5-day.
Okay.
Yeah.
And that's because you're taking advantage of the momentum, and then once the momentum starts to wane, you want to be looking at it as all right, this is my opportunity to either take profits, build cash, wait and see what comes, because then the time frame changes again, right? Because you could come back to the breakout spot for a confirmation, which will allow many traders to feel more confident about the breakout that we've experienced.
Exactly. And there's a reason they feel more confident. The reason they feel more confident is because there's usually a great deal of validity in that, Kev.
Excellent. Okay, well, then that gives us something to monitor over the coming days here. What about the NASDAQ 100? We know that we get that bounce in technology. Finally, NASDAQ gets off the mat a little bit. And yet, Scott, I'm dubious as to where we reside here, mainly because we haven't made any move to any new highs. And what I mean is, as I zoom in, yeah, we've basically moved to the same highs we were experiencing over the last 6 weeks here, haven't made a higher high, even though we've had a fantastic bounce.
Well, and that's true. However, if you go back to 518-ish, right in there, and draw in a diagonal resistance line from the top of about 518 to where we currently are now, and it's a diagonal, Kevin.
Okay.
If you'll hit the tops of each of those, we are in a diagonal. Now, what's the diagonal doing? What's it telling us? Which way is it sloping? It's sloping to the downside. And this has been going since May. We're seeing a series of lower highs. We may not be seeing necessarily a ton of lower lows. We're seeing some, though. but we're seeing a series of lower highs in this, which is interesting because that goes contrary to what we've been seeing in the S&P.
Yeah, you're right. So this looks more, well, depend. Okay, so the fun part is that anyone can draw a manual line, right? You can put it anywhere you want it, and we could say, yeah, we are right at it. But if we chose, I could just say, yeah, but Scott, look at this. Doesn't this look a little more valid? I mean, we're above the 50 day. You've got 5, 6 days of kind of fighting it out above that range. And yet, again, I can't get away from the fact that we are only trading at highs we've only seen for the last 5 weeks. We can't make any new short term highs. That also stands out to me. And we need to make short term highs to suggest that we have any opportunity for a short term uptrend.
Yeah, it does. It definitely does. The other thing we do need to remember is this is the Nasdaq. The Nasdaq is tech laden, heavily tech laden,
Right.
and so we'll see. A lot of tech news coming out, and every time we see tech news, we need to be considering what could be happening here in the Nasdaq. I like the way that you put in that new resistance, Kevin. That challenges my theory that it goes but I think you're accurate, at least in a short term, right?
Sure.
Because, and again, this is where you may employ maybe that 5 day or that 10-day moving average as well.
Yeah, to suggest that it's easy to define in the moment is a little bit tricky. The thing is, as I remind all of you traders, it's not that we know what's coming next. It's that it helps us understand where we might change that viewpoint. Last thing to comment on, Scott, if we looked at what's just gone on in the last week, it looks like we've got a little bit of an island here. So we could say, from a standpoint of technicals, you've got the low here, and then we've got the high up to where we were basically right here. And you could just say, look, if we trade on a closing basis under the gap low that we've had for the last 5 days, things get more difficult and traders would be maybe lean more defensive. Maybe they lighten up positions because it becomes less clear. Of course, if we traded to the upside on a close through 29,940 in the NDX here, well, then that's going to feel more bullish and traders are probably going to feel more confident in putting on more risky positions, taking more risk in their portfolio, less dollars for cash and more dollars invested in the market. And so if nothing else, Scott, it's often just all right, a little more risk, okay, a little less risk, right? Let the price levels dictate that for us.
Yeah, when we're talking risk on, risk off in these situations, we may not be talking about it with the same enormity of risk on and risk off
Sure.
as we may be otherwise, right?
That's right. That's right. Okay, let's look at our small caps, which continue, as I'm sure many of our viewers who are here frequently have heard me say, I don't know why the small caps keep running. Because I feel like the narrative is overhanging pretty well. The idea of higher rates for longer and elevated rates that we can't seem to keep squashed in any way, plus the narrative risk that the Fed wants to raise rates, evidently, or at least that's how traders are positioning for such an argument between now and the end of the year, Scott. And yet here we are essentially trading at highs on the Russell 2000.
Yeah, exactly. And the reason the traders and investors are concerned about that high or that interest rate hike is when they just released the last notes. I think it was three of the Fed chairs there. They wanted to raise it then. And so, we're poised and eventually all things remaining the same, we're probably going to see an interest rate hike at some point. And I'm with you, Kevin. I don't understand the Russell and the way that it is behaving in light of the interest rate environment that we're in. But
Yeah.
a lot of things right now are trading differently than we have potentially seen them in the past. So, I don't know what that means. I do know, well, I know what it means in terms of trading it. We better be paying close attention to it. And we better be very nimble. If we're trading the Russell itself, then we better be very nimble. And even any of the stocks within it, we better be very nimble in trading them. Now, I did say trading them, not investing in them. Now,
Yeah.
make that note.
It's true, Scott. One thing I just drew in this little bull flag, at resistance. We could certainly be as simple as trading whichever direction this breaks, right? If you're not invested in the Russell and you trade on a close under the flag uptrend over the last 3 days, well, then some would take that for bearish trades. And of course, a break to the upside on a close through the downtrend of the flag would be an opportunity for bulls for consideration. But Scott, talk to us a little bit about the idea of the market continuing to climb relative to all these headlines and the timing of it. And what I mean is the market it discounts everything, as we say, right? The price movement in the market is aware of all that you're worried about, all that I'm worried about, everything that we collectively are concerned about. And yet we continue to see higher highs. So Scott, with the idea being that the market is doing that, and the market's also forward looking, what, 6, 9, 12 months, are we in a better situation than the market is? Or is the market telling us that we're in a better situation than we feel? Have we already worked through some of this stuff? What are your thoughts on the way the market's acting relative to what we think about day to day?
Yeah, the market's got me scratching my head just a little bit, Kev.
Okay.
I mentioned earlier that, it's been my belief for a little bit of time now that, we're kind of overdue any kind of meaningful correction. But when I see this kind of stuff happening in the market, I'm reminded that it's the investors and traders that are running the market, and we are buying based on supply and demand, and we are buying based on the speculation of what we think is going to happen with things like AI, with things like
Yep.
data centers, with things like oil, and all of that plays into it here and has some influence. So I don't know, Kevin, how to distill all that, how to put it all in one lump, in one sentence, how to understand it clearly. But again, that's not our job. As technical analysis people, as technicians, we're just trading what we see. I love how you
Yeah.
said that earlier. We're just trading what we see. What I'm seeing here, though, is what you just said. If we get a breakout to the upside, we could have a little bit of a movement again to the upside based on
Yeah.
that flag that you've got there.
Yeah, and so basically, Scott, it comes back to the same thing, doesn't it? If you're a trader and you're trading positions, indices, day to day, week to week, then you frequently lean into trading what you see. It becomes a little bit more long range trend, obviously, viewing future movements over much longer durations. That actually becomes a little bit more comfortable for a lot of investors, when you start thinking about things over the long haul, because the more time typically you add to your trends, the more reliable they become. And so that's why our investors who just kind of broadly put their money in, stay the course, keep working it, keep depositing funds, keep building those investments and riding them and then just rebalancing on a consistent basis. That's where investors work to manage portfolios, and they don't trade or concern themselves with what happens necessarily on a day-to-day basis. But that doesn't mean there's not opportunity day to day, but it does mean you deal with a lot of noise quite commonly. All right, Scott, let's look at those semis. We're off about 0.5%. Again, a good bounce back, and yet haven't fixed anything. What I said about the NASDAQ still kind of holds water here, doesn't it? We had fallen through the 50-day, and then our rally back has been great, but it's also not made a new higher high in the short term.
Right up against the level of resistance, and we are seeing a candle, the day last candle before the big red one there. That is a hanging man candle. That's an indicator that when we see that happen, we do as technicians expect it to pull back. Does it always? No. Is there a guarantee that it will? No. But is that what we're looking for? Yes. And so we'll see if that pulls through, Kev.
Yeah, we'd love to see the semis get right back above that 50-day moving
Yep.
average. We might be okay in the sense that we're above the 20-day. And sometimes, Scott, this is as simple as, hey, let me lift this line. Let's do it like this. What if we said, hey, we've actually broken the downtrend, all right, and held the 20-day? We could just be mired above the 20-day, but below the 50 for a period of time as we digest this recent bounce and kind of validate whether we could be in a new short-term uptrend or not.
Yeah, that's true. And in the meantime, while we're watching that, we would watch for that 20-day to cross back over the 50-day. And if
Hmm.
we get that, then we have what we call a golden cross. Even though it's not on a 1030 or a 520, which we typically see it on a lot of times we're still nonetheless, we'll see it. We did have a death cross on the 2050, as you can see back in right around July 13th, between July 13th and July 20th. So we'll be watching for that as well, Kevin, as for a bullish indicator if we get that.
Yes, yes, we shall. Now, Scott, Rajesh is asking in the session here in the Q&A about meaningful pullbacks. We've had some meaningful pullbacks, but not true bear sentiment. I think we've seen some pullbacks broadly in the 10% range, which is fairly common amongst the market over even a 12-month window. But can you talk a little bit about that? What is it you're maybe expecting? Is it deeper pullback or a deeper move to the downside than that even?
A deeper pullback, maybe a deeper move to the downside, and maybe for a longer period of time than just a month, a week, a day.
Okay.
So, I don't want to pull a number out, but 10%, we see that all the time. So what would be the next logical would seem like it would be 20%. So if we get a 20% pullback, that might be meaningful. Now, when it happens, will we know that it's meaningful immediately? Not necessarily. It'll be a good indicator that it is, but we'll need for it to play out a little bit in order for us to determine whether it's meaningful or not.
Yeah, and the other thing we should say about that, Scott, is just because we haven't had one doesn't mean we should forecast one, right?
Exactly.
Because we don't ever know. And I'll point out, Scott, a 10% drawdown from here at this level would basically be the 7,000 ledge where my crosshairs resides, which would be below the 200-day moving average. It would be akin to those prior highs we saw in late 25, early 26.
Right.
And that would be support. It truly would be support, former resistance, potential support. But it would be a significant move if it were to occur, even over an extended window, like 4 weeks, 6 weeks, 10 weeks. It would not feel great, but it would be a very significant development. And the other reminder is, Scott, we'd have a lot of signals along the way, I would think, right? We'd have short-term trends breaking where traders could then build more cash, get a little bit more comfortable, and then witness and wait for the breakdown to continue, set another low, move into more cash. These are steps that traders can take along the way.
And that's why I love technical analysis so much, Kevin.
Okay.
Because you're exactly right. This isn't something that's just we're going to wake up one day and say, oh my gosh, look, we've been in a 20% pullback, for example. We'll get indicators. It'll show that it's coming. And as it's showing that it's coming, we can begin to reposture towards it, etc. But, and again, I'm not, there's nothing to panic about, and we are not forecasting, but these are things that we definitely need to consider.
Yeah, and Zink is mentioning this here. How often after breaking all-time highs does the SPX make a correction so quickly thereafter? It's very uncommon to see it like that, right? That's why that consolidation we just broke out of is so significant, Scott, because that consolidation truly could have gone either way, right? Whether it's the SPX or even the NDX, it could have gone either way. And what we've had has been supportive earnings and data to allow the market to actually move to the upside rather than break down.
And that's a big one. We have just come through, I don't know if it's the best earnings season in the S&P ever, but it's got to be close. And so that definitely plays into it a lot, Kev. The market's buoyed up by these fundamentals. We trade it based on the technicals, but you're 100% accurate on that.
So, Scott, I'm going to put up the equal weight index here quickly before we move on to oil, which we will talk next. But man, the health, the broadening. So when we say health and broadening, we know that the number of companies, number of individual sectors within the market are doing well. It's very common to see this collectively doing great. But when we get this leadership from equal weight, does that tell us that we are in a later stage of growth, being that we're not being carried all of a sudden by technology here? We're actually we're getting returns out of some of those somewhat more defensive groups like healthcare and financials and industrials and so forth?
Yeah, I definitely think that, Kevin. I think that you're right too. We're seeing kind of a broadening of the participation in the success of the market right now. And this is what we're seeing here. As we look at this too, higher highs, higher lows. It's moving with some authority to the upside. Look, some of those momentum candles in there.
Oh yeah,
Yeah, and what's that? The 20-day that it's
it
just
is.
absolutely using the 20-day textbook almost as a level of support. So man, it's hard to argue with that one. Not only that, look at the RSI. You know,
Yeah,
the relative strength on this is holding pretty well as well. There you go. Yeah.
yeah, you
And
like
so,
that, right?
yeah, love that.
So that's bullish regime commentary from the RSI, where our pullbacks are into that 45 to 55 zone for oversold conditions within the trend. And then you'll notice those lows coincide with tests of the 20-day essentially, right? So
Yep.
that's your trend opportunity. At least that's what has been the case now since we broke out in May. That's a positive. We'll take that as a positive until that changes. And now, one of my favorite questions. So, what could cause the pullback, as Barry is asking? Is it the law of averages? Is it seasonal trades? Is it some black swan issue? And generally speaking, Scott, I kind of lean into the idea that it's some point down the road, all the narratives that we're ignoring today, they don't matter right now, but all of a sudden they will matter. And then when they do matter, that's when things unwind and we witness it in the form of price action.
Yeah, yeah, that's exactly right. I can't add any more to that, Kev. I mean, that is exactly right. Um, and we're just going to have, again, we'll see this all play out. But as we do, what you just said is something that we're definitely going to need to keep in mind and give high consideration to.
All right, Scott, let's
Yeah.
move on. And we're going to talk about oil here today, looking at the futures symbol for oil, CL, not advocating for futures trading specifically. Just remember, futures trading is a higher level of risk, not appropriate for all investors and traders. And in order to do so at Schwab, you do need to be approved. So go through your steps if you're interested. Scott, we still are more or less trying to figure out what the heck is happening with crude here because since the conflict got raging, we've been in a complete and total unwind situation, haven't we?
Yeah, and I think that the reason we are is in anticipation of resolution, right?
Hmm.
And we don't talk politics here or any of that, but we do talk geopolitical, and geopolitical will oftentimes pull, not oftentimes, will very frequently pull in to the technical analysis and
Yes.
actually create a movement of the price action in the stock. And we're seeing of stocks, and we're seeing that with crude for sure. A lot yet to be resolved, Kev, but we're up a little bit than we have been over the last couple of days. We've seen some pretty high highs on crude. I would think that traders and investors are expecting that not to go back up to those levels, but to kind of even pull back from where we are and maybe start settling in. But again, this is geopolitically driven almost 100%. You can't say
Yeah.
100%. You can never say 100%, but it's pretty close.
Now, so there's a good chance, Scott, given the upward move we made originally here with oil, that we are still in the figuring it out phase, meaning you'll notice that we're not exactly at the apex of this descending triangle I've drawn in, right? We've still got a lot of wiggle room. If I extended the line down to where we are today, somewhere in the neighborhood of 89 to the upside and our lows 67. That's a pretty wide range, and we could still be watching this, kind of consolidating tighter over the coming weeks. But ultimately, Scott, the time for concern, perhaps as it relates to oil, might be a break of that downtrend line. Is that where we would start to get a little bit more uncomfortable?
A break of the downtrend.
Yes, off of the peak. That basically look if we made a higher high,
Yeah,
essentially.
yeah. That's definitely where we would start looking for some more action. That's definitely where investors and traders are going to get peaked up. And I honestly, this is one of those things that will pull through and actually influence other things in the market, believe it or not. The oil is an important one to consider for almost all trades, at least generally speaking in the market, Kev.
Yeah, and I'm reading, some of the headlines as it relates to oil continue to say we've got very mixed signals, and that's why we're seeing this brief pop here. The Opening of the Strait of Hormuz may not be any time in the near future. Iranian foreign ministers suggesting that Tehran is not currently in direct talks with the U.S. So all of these headlines will continue to be pervasive. Unfortunately, it makes it very difficult on traders. So, but we do need to be aware of it. We can't just ignore it. So at least recognize that pressure in oil to the upside probably pressures broader markets short run. Let's look at what it's doing to the energy space here, Scott. We'll pull up energy on the daily look here, the 1 year time frame. Scott, this looks like a bullish chart to me, but I'd love that insight from you.
It looks like a bullish chart, Kevin, because it is a bullish chart. Yeah, I mean, kind of a classic quintessential as we take a technical analysis look at this. Even though we are in a bit of a midterm or a medium time frame, a bit of a downtrend, as is indicated by your level of resistance there, that white dotted line. Now it's support. Isn't that interesting? How old
Very cool.
resistance becomes new support very frequently, and that's exactly what we're seeing. But I would expect now that we would continue to see some movement above that white line level of support. Look at the big candle. You got a huge close above the high of the low day. That's a momentum candle. How do we know it's a momentum candle? Because it's big. How do we know it's big? Because look at it in comparison to the other candles on the chart. And so, all good indicators. Look at RSI on this one as well, Kev.
Yeah.
We're kind of in a bullish movement on the RSI, or at least moving towards that as well. So that's showing me some strength in the energy sector.
Me as well. We could talk about that rising 20-day, right? And you called it out. Downtrend line, test of the downtrend line, former resistance, now some potential support. We are above the high of Friday, which was our low day in the drawdown, it looks like. And you could also maybe draw it in as a bit of a lengthier bull flag, or kind of a falling wedge like that, which is a bullish validation, so to speak, right? That looks like a bit of a bull flag. So yeah, that's pretty good look at energy, at least initially here. That's a worth watching. Obviously, oil and up elevated prices can do good things for the energy sector. There is a law of diminishing returns at some point, when oil climbs too far. But for now, that does look like a bullish view on energy. There was a request, Scott. Talking about one thing we don't really get to frequently here is a look at the VIX. And Zinc is asking us to do that real quickly because there's always a frequent conversation about low VIX leading some traders into coverage of longs, which is to say too much time at low volatility. Traders expect reversion to the mean. But Scott, aren't we at the mean right now? So why do we have to expect necessarily a reversion to volatility?
I'm not sure that we do, Kevin.
Okay.
To be honest with you, I mean, yeah, we are definitely at a level of support here with what we're seeing on the VIX. And again, the VIX is going to respond with some flippancy, I think I could say, more than other stocks and more than some of the other indexes will, because it's directly tied to volatility. So, but it's a good indicator for us that, if we're at a 15 VIX, that's a pretty strong bullish signal for the most part. But again, we'll keep an eye on it. The VIX is a really important indicator, really important index for us to watch. I don't know what else to say about it, Kevin, because I think it's that important. Yeah.
I'll tell you what, I kind of lean the same way, which is to say the VIX matters. I think it's easier to manage or monitor the VIX when it gives you spikes, because it's those spikes that are commonly short-lived and bring you back to the mean or the average. And we can hang out in these lower levels of the VIX for quite a while. In fact, if a trader who were short-term in nature were to use lower levels of the VIX as a means of selling long positions and building cash, it may work out fine for them, but it also might be a time frame where they're out and building cash for weeks before the market actually turns. So I guess the question is whether that fits your time frame or not. And if you can fit that time frame within your trading window, because as you can see, Scott, I mean, you look at some of these periods where we were really doing just fine in the broad market, and we were hanging out between low 14s into the mid 15s for quite a while. We can hang out there with a low VIX, and we can see the market use that comfort to just grinding higher. And that's not at all uncommon. At some point, that's not going to stay the case, obviously, as with all technical stuff. We always say it's important to monitor the changes of the current situation more than anything else, I would say.
Kevin, that's a really great insight. And and as a matter of fact, if we were to flip the way the VIX looks right now, if we were to flip that, then we would say, okay, yeah, now if when we start seeing this happen with the VIX, then we can know that we are in a more bearish posture for sure.
Okay. All right. So ultimately, that makes a lot of sense. By the way, I don't know if everybody saw what I just did there. I just threw that minus symbol right in front of the symbol for VIX, and it inverts your chart. You can do that for any symbol available to you here, everybody. So if you find that you're hanging out looking at these charts and you're trying to validate specific moves, sometimes a shift in perspective can give it to you. Don't hesitate to flip the or invert the chart. That might help you out a little bit.
It doesn't affect your account, unfortunately. I tried that.
That would be some days that would be quite helpful, wouldn't
Yeah,
it?
that's right. Yeah.
Okay, Scott. So we were looking at energy. Let me go back to my 1 year chart, and then I wanted to drop into the Market Watch quotes. Let's just check out our year-to-date returns. So we've got some laggard in utilities and communications and discretionary, back to leadership with energy. Technology seems to be relatively back in gear. In fact, let's look at tech down here. Let me see. There it is. So, Scott, this is not an ugly chart all of a sudden. We've had a really nice bounce back, where we said the NDX couldn't get to new short-term highs. Well, the tech sector did go to new short-term highs.
Yeah, and that's beautiful. That's a beautiful chart right there. I mean, I'm not commenting on, whether I like the move or not, but it's just really a clean looking chart, Kevin, where you have
Yeah.
that level of resistance. We have a break in that resistance. Look at what's happened with the moving averages just below that. We definitely had a cross above the 20. So, and again, look down at the RSI. I mean, that's very bullish as well, maintaining a bullish posture as well there. From this chart, tech's looking great.
I agree. And the reminder needs to be, Scott, new short-term highs in price, validated by new short-term highs in the RSI at the same time. Again, RSI is not a leading indicator, doesn't tell you what's going to come next, but it may validate the price trend we have seen. So short-term moving to new highs, potentially the path of least resistance relative to technology is to the upside, according to this at least. So now, Scott, we've in our final few minutes, we got some stocks in the news that I think we should address today. A couple of upgrades that I wanted to hit on. One of them is a chart that I've been pointing to in my building a stock portfolio class, only because it was an interesting technical break, and that's Hewlett Packard Enterprises. This is now not a 6-month but a 1 year chart, and they were upgraded actually at Morgan Stanley to overweight from equal weight with a target at 69. They adjusted lower from 71, but I just couldn't help but noticing the real strength here, Scott. A fantastic breakout that took it all the way to 63, and then it had to go under consolidation, right? We had to get some of that energy of that move taken out of the price, and that's exactly what happened, but it's allowed those moving averages to catch up with things.
Yeah, it did that. It came down, consolidated. Now we're looking at another bullish breakout, Kev.
That is a cool looking chart, though, with the all of this deep 10-point move,
Yeah.
and then the 50-day beneath us here at around 48. I thought that was kind of a cool look. Let's see. There was a further comment says that Morgan Stanley admits to having been on the wrong side of the enterprise hardware trade, previously believing that record component inflation would quickly stymie a recovery in the hardware spending. and they're actually flipping course. So here you've got Morgan Stanley letting you know that it's not necessarily an HPE specific development. I thought that was notable too. They also upgraded NetApp, NTAP was upgraded to equal weight from underweight with a target at 173. They're a little behind the curve on that one, Scott. That's another pretty darn bullish looking chart all of a sudden, huh?
Yeah, that thing's on a what we call a rip your face off rally. Look at that thing. I mean, it's just moving hard to the upside. Even the look at the 50-day moving average, man. I'd like to see that slope.
15% away, Scott.
Yeah,
This
yeah,
was a lovely little cup and handle breakout,
yeah.
and
No, absolutely.
goodness gracious, if this, I mean, if we were to look at basically the high close in here, right about here, and take that from the high close to the low close, we'd be looking at about that, and then we could estimate, and this is just a approximate measured move. Remember, measured move targets are never guarantees to be achieved. But when you're looking at the depth of that cup, Scott gives you a possible 215 for potential breather, perhaps.
Yeah, and that seems reasonable based on the momentum and the movement of the chart.
Yeah. And that's what we're talking about. Remember, when we do technical moves like this, it's all, is it a reasonable opportunity? Can it get there? Will it get there? Those don't aren't necessarily the same question, right? Can it get there and will it are very different answers. So, as always, have a plan for how you approach your trade. Try to adhere to your plan as best you can. Some traders like the idea of layering those exits. Many of you are familiar with my view on that, like the idea of setting multiple layers above for targets and then exiting portionally as you get to those targets. Becomes a lot easier to manage your trade that way as you're piecing out into strength. Not everybody likes to sell into strength, Scott, but those that do are setting those targets and taking action when you get there most commonly. All right, how about a downgrade, unfortunately? Let's bring up a company y'all are familiar with. Apple was downgraded at Jefferies today to underperform with they had been at hold, mind you, and they put a new target at 263 and change, down from 285 and change. I find this from a technical aspect, Scott, to be a pretty interesting spot for a rejection on the price action.
Yeah, I'm with you. I'm with you on that. I mean, you see so many levels of support and resistance here. Would you be willing to put on a Fibonacci on this one?
Absolutely. Would you like it from the lows down here?
Yep.
Okay. So we'll go from here to the peak. Oh, 61.8. That's kind of interesting.
Yeah, yeah, I thought it might be somewhere like that. So, this is what we're looking at here, gang. For those who know you're and are familiar with this, you probably love it, love it. But for those of you who are unfamiliar, this is Fibonacci retracements, and what it's showing us is potential levels of support and resistance based on the Fibonacci mathematical formulas. So, Kevin, I'm seeing this thing playing out, though. I mean, so it looks like we could come down to what, the 305 and find a new level of support there, potentially bouncing from there. And that is a level of old resistance, as you've drawn in there already. So,
Hmm.
resistance will become new support. It's interesting how these things do kind of correlate with each other. But a good look at that chart right there. Apple, never totally rule Apple out. A big player. Obviously, we're going to see things like this go back and forth with them, but we'll see how it plays out. But I would be interested in leaving a Fibonacci in place on this particular one.
Yeah, and for the record, everybody, the reason would be again, you've got two levels where movement through them will tell us or give a lean directionally, is what I should say. So
Correct.
above 317, you've made a higher high, and the likelihood now becomes more upside rather than downside. Of course, under 300, it's the exact inverse of that. Now your risk is greater likelihood of a 200-day moving average test. That's around 280. And I'll also point out, we were just talking about how often you move to new highs and then witness pullbacks. Well, this is a pretty short-term healthy pullback in Apple to the lows we just made. I mean, this happened over a very short, less than a week, and it dropped 12.5% from those highs.
It
Now,
did, Kevin, but it wasn't a free fall. I mean,
No, it wasn't.
it dropped to a very intentional spot,
Yes.
and I love how you have those drawn in there. Let those levels of support. Now, if we see it just blow through all those levels of support, then that might be considered a free fall. But Apple did not free fall. It
Yeah.
reacted to the news. It kind of now it's kind of restructuring or repositioning itself, and we'll see. I mean, I believe that this is still a healthy company, so we'll see
Sure.
how it goes. Yeah.
I did want to draw it in because I was just seeing it that 1 cent made the note. It looks like a bear flag, except, and it does because you've come into it bearishly. So we had a big
Yeah.
move down, and then you have this. But remember, typically a bear flag occurs in the midst of a downtrend. This
Right.
is actually, in a long range uptrend at an area of potential support. So let's not necessarily overdo the look of the bear flag here. If it were a by the letter bear flag, it would be in the midst of a downtrend at the same time.
And there's a reason for that. And because
Yeah.
it's not a bear flag in a downtrend, the efficacy behind this we would expect to be way less.
That's a very good way of putting it, Scott. Hey, we have covered quite a bit today. I hope all of you got something out of it, maybe just one single nugget. But as always, Scott, great to get you once a month on the Monday show. But I love having you, man. Thanks for being here.
Yeah, good to be here, Kev.
And thanks to all of you. Big thanks to Brent Moore and the Moore's in the chat today. Make sure you follow us on X. If this conversation was helpful for you, we'd appreciate a thumbs up down below. Make sure you're subscribed to the channel, everybody. Much more coming from us. I'll be back in the chat with Ben Watson at 11 a.m. Eastern for the cryptocurrency class. So if you're looking for basics on crypto, that's the one for you. Have a great Monday, everybody. Look forward to seeing you all again real soon.